and their dog Poggy live in the Atlanta, Georgia area. Kelvin works primarily with companies in the Southeast US, but has worked with customers all around the globe. We're lucky to have him on our team. Thanks for joining us today, and I'll turn it over to you, Kelvin.
All right, thanks, Bailey. I appreciate it. We're going to have to update that. It's almost 8 years now that I've been with Acumen Learning and lived every moment of it, get to work with some fantastic companies and fantastic people as well. Looking forward to our time today, looking at Starbucks. Matter of fact, let me just start off with a question for you. I'd love for you to give me an answer in the chat box. If you're here, my guess is you might have some interest in Starbucks, be a customer of Starbucks, an employee for Starbucks, a shareholder for Starbucks, or maybe you're just interested in how to listen to an earnings call. Give me a little feedback in the chat box if you don't mind. What brought you here today? Was it your love for Starbucks? Are you drinking a cup of Starbucks now? Did you have some earlier this morning? It's past coffee time for me, but some of you, especially if you're out on the West Coast, may still be drinking some Starbucks or some kind of coffee anyway. Awesome. Thanks, Claire. Well-known company, love for Starbucks, interested in learning about earnings calls. Excellent. Improve. So most of you came because you want to just improve your knowledge about how to listen to an earnings call. Starbucks eval for potential purchase. Yeah, good. That's certainly a great way to listen to these calls and a great reason to be here as well. Had Starbucks and interested in their finances. Yeah, it's interesting information we're going to be going over today about their finances. Let's see here. Understanding earnings calls, all the above. Awesome. So I'm gonna go ahead and ask you another question here. Let me open this poll here. When was the last time that you listened to an earnings call? That chat box should be open for you now. Was it this year, last year? It's been a while, never. Or I'd rather go to the dentist than listen to an earnings call. We at Acumen Learning, as Bailey mentioned, we teach business acumen classes. And one of the things that we do is we use some tools in our classes that actually help us listen to earnings calls. And I'm going to be sharing a lot of those tools and processes with you today about how to listen to earnings calls, whether it's your own company, whether it's a company that you're interested in, maybe it's a company you're interested in investing in as well. So we'll talk a lot about those classes today, but primarily we're going to be talking about Starbucks and their success. Let's see here. All right. Let me share those with you, those poll results. Looks like we've got about let's see, about 29% of you have had listened to an earnings call this year, and we're only in February. That's fantastic. Another 16% of you listened to one last year. It's been a while. Some of you have never listened to an earnings call. Hey, you're first today, right? So I'm excited about that and glad that you're here with me. I'm going to open up another couple of questions for you as well. Let's see here. Have you ever attended one of these webinars? Let's see here. There we go. All right. So let me open the poll here. Is this the first time you've attended the webinar? What CEO wants you to know? Yes, it's first time. No, I attended a webinar earlier this year, which would have been last month. Or no, I attended a session last year. Getting some good responses here. Thank you all for those responses. Got a little bit of everything in the answers. A small portion of you did attend our January earnings call lab as well, so thank you for that. All right, let me close this and get our poll results here. All right, we got about 36% of you have, this is the first time you've attended, so thank you for joining us today. Attended a webinar earlier, about 9%, 19% last year, and about 36% of you didn't answer or have never attended one of our webinars. One last question for you, and that is, here you go. Are you an Acumen Learning graduate? Have you ever been to one of our business acumen courses? Have you been to one of our webinars? Maybe it was building business acumen. Maybe it's applying business acumen. Yes, I've attended a program this year. I did attend a session in 2021. Bailey and Brooklyn, we need to update our slide here. We're past 2022 now. We have 2 responses for 2021. I guess I need to open up the slide or open up the poll. Sorry about that. There we go. Yes, I attended a program this year. Again, we're early on in the year at this point, but love it if you have attended programs this year. There we go. Session prior to 2021 or never attended. Some of you attended a session in 2021. If you attended in 2022, just feel free to put it in one of those 2021 responses there. Good. Looks like we've got about 40 to, it's going up now. About 50% of you are an Acumen Learning graduate or business acumen graduate. So thank you for attending today. And I may lean on you all just a little bit in order to help out with some of the questions that we're going to be talking about today. So let me just continue on here. Just some statistics real quick. 95% of employees don't understand their company's strategy. Guess what? Most strategy is financially related. So metrics and numbers, financial statements, all of that stuff. So it's important to know those metrics. 90% don't understand their company's important business metrics. That's what we're here to talk about today. And we do that in our classes as well. We spend a little bit more time than an hour. We're going to be focusing on Starbucks today. You'll see here Howard Schultz did the last earnings call, and he is considered to be the interim CEO. He came back in about a year or so ago as CEO. He's actually been CEO 3 different times at Starbucks. And the interesting thing about this is, imagine you're Howard Schultz and you're the CEO. Well, imagine you're not the CEO come about April this year, because he is stepping down. He's going to stay on as an advisor, but basically there is a new CEO hired that has been shadowing Howard for the last few months and taking his place. I believe it's starting in April. But Starbucks was founded in 1971 in Seattle, Washington. Howard Schultz actually joined in 1982 as Director of Retail Operations and Marketing, went on to be CEO, as I mentioned, 3 different times. Interesting, 1988, Starbucks started offering full health benefits to eligible full and part-time employees. Seems like I've actually heard where Starbucks pays for education as well for their employees, which, by the way, they call partners. How would you like to be a partner in Starbucks? They did their initial public offering in 1992 under the symbol of Starbucks, which they still are using today. They've got over 36,000 stores worldwide, almost 16,000 stores in the US, and China is their number 2 country with over 6,000 stores, and we'll see a little bit more about that coming up. That's part of the interesting information we're going to be looking at today. Howard Schultz, in his tenure as CEO, he didn't do 108 consecutive earnings call presentations, but he has participated in 108 different earnings calls for Starbucks as CEO during his time. So again, imagine you're CEO. What do you need your employees to know? What do you want your employees to know? By the way, I mentioned this just a second ago. They call their employees partners. I think that's a great name for employees. What do you need your customers to know? Your customers are most likely going to be some of your investors as well. What do you need your shareholders to know? Shareholders have to make a decision. Do they want to hang on to the stock? Do they want to buy the stock? Prospective shareholder. What do they need to know to make them comfortable with where the organization is going? What do you need your partners to know? They've got a lot of different channel partners as well, grocery stores, airlines, different things like that, where they sell their coffee. And certainly they've got licensees also. So what do you need your partners to know? So that's why companies do earnings calls. They're not required of publicly traded companies. However, it's generally accepted and generally advised that companies do earnings calls. Now, let me give you my guarantee today. We do these once a month. My friend Brent Barkley does most of these. I usually step in for him when he's not available. But my guarantee, if you'll do these, if you'll listen to these calls 2 or 3 or 4 times, and start practicing on how we teach you to do these calls. You're going to build your credibility within your organization. You're going to build your career, and you're going to build your company as well. All three milestones that I think every company is looking for in their employees. So take that to heart, and I think you'll see the difference after you start listening to a few of these and using our process and tools to be able to do that. Basically, we're going to look at 3 steps: prepare, analyze, and apply as we talk about this process and tool today. We're going to start off with preparing for the earnings call. Basically, 2 things you need to know about earnings calls. There's 2 different parts. Part 1 is the prepared remarks. Now, this is typically done by the CEO, maybe CFO. Sometimes there's a COO who actually participates in those, or maybe even a chief marketing officer. Now, Starbucks, interestingly enough, as of about a year ago, they no longer have a COO. So you won't see a COO participating in those calls. However, they have a chief reinvention officer now. We'll talk a little bit about that as we go through today. But prepared remarks, it's exactly what it sounds like. They prepare these remarks. They read these remarks during the earnings call. Usually it's about 20 to 30 minutes of the hour-long earnings call. And then the rest of the time is for question and answers from the analysts who follow Starbucks or the company that you might be looking into. By the way, if you have any questions as we're going along, feel free to put those into the chat box. I keep a pretty good eye on that, and Bailey and Brooklyn will help me out if I miss one. But I'm more than happy to go back and answer questions, or make sure we get all your questions answered as we go. So prepared remarks and question and answer section. They prepare quite a bit for the question and answer section too. I think they probably are pretty good at guessing some of the questions that they might be getting there. So that's the preparing for it. We've got to locate the call or the transcript. So if we're going to listen to the call, there's usually a webinar. We will need to know where to go for that webinar. If we don't get to listen to it the day that it happens, we can go back into the investor relations site and we can find that webinar. We can listen to it again, or we can find the transcript and we can read through the transcript. And part of our process today is what to listen for or what to read and look for as you're looking through that transcript. Sorry about that. Sorry, I was actually forgetting where I was going. So if you want to try to find that for Starbucks, just type in Starbucks Investor Relations and it'll take you to this page right here. You can see we were just in time for the Starbucks Q1 fiscal 2023 results. Their year ends at the end of September. And so they've gone through Q1 already at the end of the year, and they are currently in Q2 right now. So you can see down here, Starbucks reports Q1 fiscal 2023 results, announces fiscal year end conference call, and you can find different things associated with the earnings call. Now, on this, you can see upcoming events. The next one is coming up in March. Here's the link to the webcast. You can add it to your calendar. Here is our past earnings call for Starbucks. It happened on the 2nd of February. And you can see the tools available for you. You can listen to the webcast. You can read the earnings release. You can get the earnings at a glance, and you can get the transcript from Starbucks here as well. And also, same thing right here. You can see the results. And Rachel Ruggieri, the CFO, I'm very proud of what we achieved in Q1 with nearly every business segment contributing to our strong performance. So that's the investor relations website. Also, there's a website called Seeking Alpha where you can get all kinds of information on just about any company that you might want to. Here you can see they've got their stock chart there. You can get their financial statements. You can get their ratings, earnings. You can get their transcripts, their SEC filings. All publicly traded companies file a 10Q for the quarter or a 10K for the year. And so we have that opportunity to get just about anything you want to at Seeking Alpha as well. Now, we've located the call or the transcript. We want to review your notes from the past calls. Well, wait a minute, Kelvin. What are you talking about? Past calls, notes from past calls? Well, After today, you'll know how to have notes on past calls. And so you may want to review those notes. How are they doing? What are they going to say about these things? I was kind of curious about that last quarter. Let's see how they progressed this quarter. And then finally, meet with your team. We think it's a good idea to listen to these calls with your teams. Maybe it's employees that report to you. Maybe it's peers. It could be any number of different things. But that way you can kind of bounce some ideas off of each other while you're going along there. So we've done the prepare phase. We're getting into the analyze phase now. I want to do a quick review of our 5 business drivers. This is really the foundation for our classes as well as our earnings calls. We talk about these 5 business drivers in both cash, profit, assets, growth, and people. Why these 5 drivers? Well, cash, profit, and assets are tied directly to the financial statements, okay? And then I haven't met a CEO yet or a shareholder who wasn't interested in growth. And it takes people to make all this happen, primarily employees, partners in Starbucks case, and customers, but there's so many other people that could be involved in that people driver as well. Okay. Now let me just do a quick review of these 5 drivers as well. Cash. Somebody do me a favor. Fill in the blank for me in the chat box. Cash is what? Cash is what? Fill in the blank for us. There you go. Yeah, thank you. You can tell some graduates from our Acumen Learning classes in the past. Cash is king. We have got to have cash as an organization. We can be unprofitable, but we have got to have cash. So we talk about cash position. We talk about cash flow. So we talk about free cash flow, a lot of different things that we might talk about. Yeah, cash is our oxygen supply too, Bailey says. What happens when we run out of oxygen? We die. What happens when a company runs out of cash? They're gone too. Every once in a while they might reorganize, but most of the time they're gone if they run out of cash. From a profit standpoint, we've got 3 basic profit metrics. We've got gross profit, we've got operating income, and we've got net income, net earnings, net profit, whichever one of those you want to use. Yeah, we've got 3 names for the same thing there. We talk about revenue as being our top line on our income statement, and net income or net earnings being the bottom line on our income statement, and all of our expenses in between there. So how can we have an impact on profit? Well, we either increase sales by increasing price or increasing volume, or we reduce expenses, and that will have an impact on profit for us. In terms of assets, we want to try to balance our asset strength and our asset utilization. We talk about growth. We talk about organic growth as well as inorganic growth, some of the benefits and consequences of those. And then, as I mentioned, we talk about people in terms of customers, employees, but sometimes even competitors can have some impact on the financial success of our business as well. So quick review of our 5 drivers there. We're getting into our tool so that we can analyze. The first part of that tool is our executive alignment activity. So basically what we're going to do here, and I've done all the heavy lifting for you, so you don't have to worry about that. But as you use this tool, you'll get to participate in that as well. And I'm going to get you to help me out just a little bit also. But basically what we're going to do is we're going to read the letter to the shareholders, or we're going to listen to or read the transcript from the earnings calls. Yeah, all of it. Primarily the executive comments, but at the same time, the analyst questions revert back to those 5 business drivers as well, and the responses that are given. So as we read through either one of those documents, we're going to look for examples of cash or profit or assets or growth or people. Now, as you can see in our tool, we've got definitions for each one of the drivers. All right, here's our definition for cash. We've also got examples of statements or words or phrases that might be used by the executives to talk about our 5 business drivers. In other words, they may not say cash, profit, assets, growth, or people all of the time. So some buzzwords that you can listen for as you read through this. Sources and uses of cash. Obviously that mentioned cash, but sources and uses, we know that probably is an implication around cash. Dividends or distributions. We pay out dividends in the form of cash. Stock buybacks. We use cash to buy back shares of stock. Debt, issuing stock, capital expenditures or CapEx, divesting of assets, mergers and acquisitions, any number of things that might refer to cash. We want to be aware of those as we're listening or reading through that. We've got other examples for profit as well, although the 5 drivers I should say. So anytime you hear sales or revenue, I think of profit, because if we increase revenue, we can increase profitability. Pricing. There was mentions in the Starbucks call about pricing that they had taken advantage of. That can have an impact on profit. Volume, top and bottom line, gross profit, direct cost, a lot of different things there. And then over on this next page, you see 4 questions we want you to be aware of as you're thinking through that. Which drivers seem to get the most attention and why? Now, after you do this exercise, you're going to know which drivers seem to get the most attention. I'm going to share with you mine. As a matter of fact, you'll see what I like to do is I like to print it out, and I like to put little abbreviations on my transcript. So I've got C for cash, PR for profit, A for assets, G for growth, PE for people, and then also, I don't know if you can, how well you can see it, but right there you'll notice a KM, and I've actually got that circled. What do you think KM might stand for? You got cash, profit, assets, growth, and people, but wait, Kelvin, you haven't told us about a KM. Any idea what KM might stand for? Key, there you go, Kat. You're very, very close. Key messages is kind of how I use it, but key measures could be very appropriate as well. So yeah, I want to, what I want to find out, I want to find out their priority around the 5 drivers, and I want to figure out what their key messages were, because those are going to help me answer this first question here. What were 2 or 3 main points the executives were trying to make? Those key measures are going to help me out with that as well. What are the goals, trends, and objectives going forward? Yep, you got it. Key messages. And then finally, what questions, key questions or concerns were raised by the analyst community? So now I can go back through and I can look at the analyst questions and I can see what their questions related to from a 5 driver standpoint. And then and there's typically common in what their questions focus around. Thanks for the question, Mo. Yeah, top and bottom line. Top is revenues on our income statement or sales. Okay, and it may be listed as revenue, sales, net sales, any one of those. And then the bottom line is net income, net earnings, or net profit, however the company might state that. Yeah, so top line, somebody says, how's your top line doing? They're talking about your revenue. If somebody says, hey, how's your bottom line doing? They're talking about your net income. So net income is your revenue minus all of your expenses, and finally get down to that net income line. Thanks for the question there. All right, so I'm going to ask you to help me out just a little bit. We've got the 5 driver diagram over here to give you some reminders of which driver they might be talking about. This is Howard Schultz here, is still interim CEO. So let's just think about this first statement here. Interesting statement here. He kind of stuttered almost a little bit. But he says this next line I think is just, well, even when I read it, I'm surprised. With 8 of the 10 highest sales days in our history recorded in the quarter, Q1 he's talking about there. So which of the 5 drivers do you think that he's referring to just with that first statement there? Cash, profit, assets, growth, or people? Yeah, we got some cash, we got some profit. Exactly. Yeah. So if we're having an impact on profit, we're probably having an impact on cash as well, right? Now there you go, Charvel. Hope I pronounced that right. I think growth too. Highest sales days recorded in our history. So that shows a pretty good sign of growth as well. So yeah, I would probably focus mostly on profit and growth. but certainly there is some cash in there also. Let's see. What's the specific difference between net income and profit? From my understanding, they're the same thing. Is that correct? Yes, it is, Jay. Yeah, we've got three different names. Income, profit, and earnings all mean the exact same thing. And usually it's net income, net profit, net earnings. But every once in a while, I've got a company that will say profit for the year. Okay, so all of those mean the exact same thing. Why do we have three? Somebody didn't like the first one, so they came up with another one. So a little bit of flexibility there. All right, let's take a look at the second comment that Howard talks about. Consistently strong demand drove revenues up 14% to a quarterly record of $6.6 billion and comp sales of 10% over last year. Comp sales or comparable sales in retail, that's a big metric. How did you compare this year compared to last year? Did your same store sales or comparable sales grow over that period of time? Which drivers do you think apply to this statement here? Consistently strong demand drove revenues up 14% quarterly record of 6.6 billion and comp sales of over 10% over last year. Yeah, profit and growth again, right? What do you think Howard's priorities are going to be in the earnings call? If you guess profit and growth, you are absolutely correct. Maybe not necessarily in that order. We'll see that here in just a second. And then finally, active Starbucks Rewards membership in the U.S. Exiting Q1, we totaled over 30 million members, up 4 million members, or 15% over last year. Now, a little bit of change here. It's not just profit and growth here. What else was added to this particular statement? There you go, Michael. Yeah, people. Right, people, growth, people, and again, probably could throw in profit here as well. But we'll see some other statistics around Starbucks Rewards membership also. Just phenomenal numbers there. I want to share with you Rachel Ruggeri, and I don't know if I'm saying her name right there, Ruggeri. She is Executive Vice President and CFO for Starbucks. I'm not going to highlight this. Just we'll read down through this and tell me what you see here. Our business and our brand are strong and strengthening every day, as demonstrated by the record sales in Q1. Our Q1 performance serves as proof point that we are progressing nicely against our strategies, inclusive of our reinvention plan. We'll hear that quite a bit, and delivering results we projected. We will continue to innovate in the critical areas of digital, product, and stores as our new era of growth is just beginning to unlock. What do you think? Cash, profit, assets, growth, or people? A lot of growth there. Absolutely. Absolutely. Anything else besides growth? Renee says all of them. I think I could probably agree with you, Renee. Ron and Michael are saying some assets. There's Claire with assets as well. So we've got growth and assets specifically. Let's just kind of go down through here. I would call our brand an asset, strengthening, as demonstrated by record sales in Q1, growth, and there's that sales word, so we get profit out of there. Our Q1 performance serves as proof point that we are progressing nicely against our strategy, inclusive of our reinvention plan. Reinvention plan is going to kind of focus around people, profit, growth, and there's some assets in that reinvention plan as well. And it's going to take cash to do it as well. So really, reinvention plan is probably going to be all 5 of those drivers right there. We will continue to innovate. Which driver do you think innovate corresponds with? I'm always kind of interested in people's thoughts on innovate. I've got my own ideas, but what are yours? Growth, growth, growth. Yep. Assets and growth. People. Yeah. Innovate can go a lot of different directions, but I tend to think mostly about really growth and assets, but you could certainly throw in cash and profit and people as well. All right, so we got a lot there. Now, let's see here. So here's how many times I saw the 5 drivers as I read through the transcript. I don't know if you all can see my cash numbers there, but it's basically 11. So the left side is going to be the executive comments, the prepared remarks. The right side is going to be the analyst questions. And that includes the responses from the executives as well. So you can see 11 comments about cash, and most of those were talking about dividends and share buybacks and things like that, investing, those types of things. Only one question about cash in this particular earnings call. We'll show you how to get a copy of the workbook toward the end of the call, Sanjeev. Thanks for the question and thanks for the curiosity. So you can see they probably wasn't a whole lot of concern around cash if only one question came up about cash and only 12 comments altogether. Mainly because there weren't any real questions about cash. They're doing fine with cash. The analysts saw that. The executives explained how they're doing with cash, and the results show that as well. Just to cut to the chase, you can see here we've got 72 mentions of growth between both categories and 68 mentions of profit. So those are our top two, followed not far behind by people and by assets, but cash was pretty far off there. So we're going to focus on growth and profit as we go through the rest of this exercise to a large degree. Okay, now here's my questions. We saw this just a few minutes ago. Which business drivers got the most mentions and why? I don't expect you to read this. I just wanted to point out to you, I've got the answers. We're gonna look at some larger sections here that'll talk about the answers, but we've got them all filled out. So here's the first one. Which business drivers seem to get the most attention and why? Well, I say growth and profit. Typically, I like to split these out and have a growth section and have a profit section, but most of the comments really almost related to both. So I just made it a combined section here. So let's just go through some of these comments. Record quarterly sales of 8.7 billion, up 8% over last year, up 12% if we exclude changes in foreign currency exchange. A stunning, now this is their words, not my words, a stunning 10% comparable growth in the US and North America, 5% comparable growth globally. Pretty good results there. Strong sales and comp growth, okay? So sales is profit, growth is growth in every international market we are in except for China. A lot of mentions about China in this earnings call. Q1 performance underscores the success of investments. Now that's cash we are making in our people and extending our global leadership around everything coffee and in relevant innovation that together are driving sales and transaction growth around the world. So we had some other drivers in there also, but it ultimately boils down to profit and growth. Position, execute our growth agenda. And our goal is to have roughly 45,000 stores, 36,000 now, 45,000 stores delivering best-in-class returns around the world by the end of fiscal 2025. So basically, we're talking about roughly 3 years. So that's another, 9,000 stores, about 3,000 stores per year over the next 3 years. That's a pretty hefty growth goal. Strong growth in U.S. Starbucks Rewards membership sequentially, quarter over quarter, and then year over year as well, and the extraordinary record of $3.3 billion loaded on cards and gifted in the U.S. Now remember, Q1. Think about it. Let's think about that Q1 time frame. Basically, it was October, November, and December. So we got Thanksgiving in there, shopping. We got Christmas in there, more shopping. People are giving out Starbucks cards and gifts to family and friends as well. Starbucks entered Q1 with roughly $2 billion globally waiting to be spent in our stores. Let's think about this just a second. We talk about accounts receivable and accounts payable in our classes. Do we want to collect on our accounts receivable quicker or slower? What do you think, quicker or slower? Yeah, exactly. We want to collect quicker. We want to pay slower. All right. So how quickly did Starbucks just collect? They just collected $2 billion globally waiting to be spent in our stores. Talk about a cash conversion cycle. That would be a fantastic cash conversion cycle. And you know what? Some of that money may never get spent. You know, have you ever thought about giving a gift card to somebody? You don't know if they like Starbucks or not. Yeah, some of that money may never get spent. Now, a lot of these are Starbucks Rewards members, so I'm guessing it probably will, but you never know. Average weekly sales in the U.S. company-operated stores. By the way, most of their stores are company-operated, especially in U.S. and Canada. They do have licensees and they do have joint venture partners internationally as well. But company-operated stores reached record highs in Q1, exceeding the prior record set in Q4 of fiscal 22. So 2 quarters in a row reaching record highs. Eight out of our 10 highest sales days ever were in the quarter in Q1. 15% increase in channel revenues in Q1 over last year. U.S. licensed stores posted revenue growth in excess of 30%. Latin America revenue, these are all international numbers here. Latin America revenue growth over 50%. EMEA 20%. UK double-digit comp growth. Asia Pacific 20% revenue growth. And Asia Pacific crossed over 5,000 stores. Japan having significant growth. Do companies make that money when the gift card is initially bought or only when they redeem it? Well, they're paying for it when they buy that particular gift card. So yeah, the company Starbucks gets that cash when that gift card is actually bought. And so now what's kind of interesting about that is you may get the cash here and you may get the revenue down the road somewhere, and the cost is going to be down the road after you got the cash maybe months before in some situations. So yeah, they typically get that cash when it is actually bought. All right, so that's question number one. What were the 2 or 3 points the executive was trying to make? I kind of narrowed it down to China and reinvention. All right. Yeah, you could have said profit and growth, but there was a lot of talk about China. There was probably a point in time where Howard probably spent 2 or 3 pages of transcript talking about China. And think about it, they've basically been shut down over the last 3 years. Zero COVID. Nobody's going anywhere. So COVID-related mobility restrictions and a spike in COVID infections following the end of zero COVID. So you want zero COVID, they ended zero COVID, and then all of a sudden there was a spike in COVID infections. So that resulted in comp sales of minus 29% for the quarter. Weak sales combined with cost to support the health, safety, and well-being of our partners, our first priority, negatively impacted total company earnings by 6 cents per share. Doesn't sound like a whole lot, but it would have certainly been a much better quarter had they not had to do that. I love this, though. We said the well-being of our partners, which we said is employees. All right. So sounds like they were paying extra to support their partners. And so that was extra cash going out the door. Confident that the end of zero COVID marks the beginning of China's emergence from 3 years of pandemic, puts the country on a path of reintroducing normalcy and routing back into people's lives. Let's see here. When a customer buys a gift card from Starbucks, Starbucks would collect the cash and record this as revenue too on the spot, right? I don't know about the revenue, Jay. That's a good question. It seems right because it's a gift card, but they may not record it until they actually redeem the gift card in the stores. I'm not sure about that one, so don't quote me either way on that one, but that could be it. View of China is informed by patterns of post-COVID behaviors we've seen in countries around the world as pent-up demand is released. Stores in China are again open without restriction and our partners are back at work. Starbucks has been in China over 24 years with 6,100 stores and plans for 9,000 by the end of 2025. So almost another 3,000 stores alone in China by 2025. Okay. Q1 comps declined 29% with a 42% comp decline in December alone, while 1,800 stores were closed. So tough 2 or 3 years for China Starbucks stores. Second half should be stronger than first half comps. They're talking about this particular year. So Q1, Q2, we're actually halfway through Q2 right now. So into March will be the end of Q2. Then we should see the comps start climbing in this particular fiscal year. Reinvention, mentioned 21 times during this. Basically using technology to make customer visits more personalized and effortless while freeing up store partners to focus on creating more moments of connections. So making it better for the customers, making it better for the partners as well. Equipping partners with more tools and training. 8% improvement in U.S. hourly partner turnover. Okay, so that's pretty good improvement. We are making and delivering results and creating shareholder value, providing us with tremendous confidence in the revenue, margin, and earnings per share expectations. And we've gained productivity through reinvention, which should lead to margin expansion as well. So a lot of good things in terms of reinvention also. What are the goals, trends, and objectives going forward? Howard Schultz is stepping down as CEO, I mentioned in April, and being replaced by a gentleman by the name of Laxman. And I'm not sure how to say this, but Narasimham, maybe. So that's coming up. Howard's going to stay on as an advisor, and I think we'll talk about that later. China still faces headwinds in their recovery. Talking about Q2, still anticipate negative impact on operating income Q2. Comps are going to be greater. That negative impact to operating income is going to be comparable to or greater than Q1. That's not a good thing. That's not saying it's going to be greater good. It's going to be greater bad potentially in Q2. But again, should see improvement in the back half of the year. Long-term opportunity in China, very strong. China store growth plans. Again, talked about 3,000 new stores coming up in the next few years. Significant investments to the reinvention plan. Operating margin expected to decline sequentially in Q2, then recover in Q3 and Q4. And then finally, here's a little cash statement here. Committed to returning approximately $20 billion to shareholders by the end of fiscal 2025. So about $6 2/3 billion that they're going to be returning to shareholders through repurchases and dividends. And then this is a pretty good statistic here. Annual dividend growth has averaged greater than 20% since the inception of the dividend program about 51 quarters ago. So that's where they're headed. What are some of the key questions or concerns? I'm not gonna talk about each one of these, but we'll kind of go through the questions anyway. A lot of them, again, refer to COVID, China, and some of the challenges associated with China. Traffic today versus pre-COVID. Sales are well above pre-COVID, but clearly average check is the driver of that. So basically, yeah, that was an analyst question. He was asking basically for confirmation there. They did confirm that the average check or the average ticket is the driver of that. They've had some price increases over the last year, so that certainly helps out as well. They did go on to say that transactions per store per day is still below pre-COVID levels, but average ticket certainly helped. So our traffic units and overall ticket grow in our highest demand periods. And so, yeah, that gives us confidence that our growth objectives and our ambitions for this year are well suited. You mentioned China was 6% headwind. Number two, excluding that, earnings would have been better than we were thinking. Where were you surprised? Were U.S. comps higher, other geographies or segments? And basically the answer was a lot of different things. Stronger performance in the U.S., including our license and U.S. company-owned stores. Growth across international markets and growth in our channels. Favorability in foreign currency exchange in some areas. And then talked about the international studies that we talked about, or international results that we talked about just a second ago. Yeah, let me, got a request to show this last slide again. There we go. I think that's the one that you're looking for. So just while they're looking at that slide, Latin America, revenue growth over 50%, EMEA 20%, UK double digit, APAC 20%, and then 8 consecutive quarters of strong revenue growth. Okay. All right. Awesome. How would the brand do in a recession, and what metrics make you comfortable in a full recovery in China? They've got a brand tracker. And a lot of companies will do this, a brand tracker. And basically it shows that Starbucks remains the Chinese customer first choice in the away from home coffee category. Okay. And Starbucks is the brand leader in terms of brand affinity, visitations, and frequency. So they've got some pretty good track records there. So from a brand perspective, we're in a strong position. Last quarter, we saw ticket growth and transaction growth, even in the face of microeconomic headwinds. It'll be nice when we get out of this macroeconomic headwinds situation. And then highest average ticket ever in the history of the month of December. So I think we'll be okay, is basically what they were saying. With China suffering through 3 years of COVID, is there some concern that consumers' behavior may be affected in how people interact and gather? Basically, the response was, I think when we all came out of COVID, we were so happy to be out. We couldn't wait to see people, couldn't wait to interact with others. And that's basically their response as well, is that it seems to be going quite well and that people seem to be getting back to normal, but it is going to take some time for everybody. If China sales recovery gets back to 2019 levels, does this allow you to return operating margin target of 17 to 18%? They expect margin growth, especially in China. There's several different things that could lead to that. One of the things is their digital platform. In 2019, that was only 10% of sales. Now it's about 50% of sales. And so there's certainly expectations for tremendous recovery there. Any staffing challenges in China? We've certainly had our staffing challenges here in the U.S. I've heard of companies staffing to 200% levels so they can just get 100% of staffing in situations. But basically, the county, I love this statement, no shortages currently, and we're ready to rock and roll in hiring more people. Took care of our partners the last 3 years, and last quarter we had all-time low turnover rate, and people are staying with us. And then let's see here, with 30 million members in Starbucks Rewards, how much opportunity is there for growth? Saw the membership grow 15% last year, so anticipating even more. Plus, 56% of our transactions come from Starbucks Rewards members. So we'll see that continue to grow. Any incremental pricing plan for 2023, particularly in the U.S.? Had it last year, not really any plans right now for any price increases this year. All right. Now, that's the first part of our analyze. All right. That's the executive alignment part of the exercise. We got the priority on the 5 drivers. We answered the 4 questions. Now here's the second part, the financial analysis. This is what we call a navigating the financials worksheet. We call it NTF for short. Basically how it's organized is we've got cash, profit, assets, and growth along the left-hand side here. We've got key metrics as our first column. And you can see, just as an example, cash and cash equivalents. So the line item we would be looking for on our financial statements would actually be cash and cash equivalents. This next column tells us where we can find that number, either on the income statement, balance sheet, or statement of cash flows. So we can see here, we're going to find it on the balance sheet. So I'm going to go to our balance sheet here, and you can see our current assets, and the first our first line item is cash and cash equivalents. So for 2000, I got to just look and see here real quick. Sorry, some of that's hidden on my screen. 2023 first quarter, we had $3,186,000,000 in cash and cash equivalents. All right. 3186, $3,186,000,000. So we're going to put that, I'm going to round it up to 3,187,000,000. We're going to put that on question number 1. Now our next one, cash from operations. We're going to look for cash from operations. We can find it in the cash flow statement. Here's our cash flow statement. We've got 3 sections: operating activities, investing activities, and financing activities. Here's our cash flow number, $1,593,000,000, slightly down from last year, but not terribly. So we're going to put that into our numbers right there. Total revenue, here's our income statement. Now, you got to be careful here. We talked about the top line and bottom line just a little bit ago. Our top line is our revenues. But look at this. We've got 3 different ways that we report revenues: company operated stores, licensed stores, and other. So if we just took this first revenue line, $7.1 billion, we'd be missing out on some of the revenue here. So some of our metric calculations might be slightly off. So we want the total revenues there of $8.7 billion. All right. So I'm going to put that in there. Our net income or net earnings attributable to Starbucks. All right. $855 million. So we're going to put that in right there. So now we've got our net income and our net revenue. Now our next one is our net profit margin. So guess what? We've got those 2 numbers already. So 855 divided by 8,714 comes out to 9.8% in terms of net profit margin. I'm going to go ahead and fill out the rest of this. You can see a comparison to Q1 last year. You can see just some of the other metrics here. Our equity ratio. Starbucks basically funds their operations through debt as opposed to equity, which gives them a negative equity ratio. It seems pretty consistent over the last several years, and I've seen other companies do that as well. Return on assets, this is basically taking a look at our net income compared to our total assets, about 3%, and you can see consistent with the previous year as well. Revenue growth, 8.3% this year. This is for the quarter. 19.3% last year. Net income growth up last year as well. And then finally, earnings per share up as well. So looks like pretty good comparisons here. All right. Cash from operations is down just a little bit. Cash is down just a little bit. Revenue's up. Net income is up as well. Now, let's compare this to the year end 2022. So September of last year. So cash for the quarter is actually up over the full year. Our cash flow for the quarter is actually down compared to the full year. Here you can see total revenue, not really a good comparison there. But when we get down to net profit margins, 9.8 versus 10.2, so staying pretty consistent there. You can see the equity ratio pretty consistent as well. Return on assets is actually a better metric when you look at it on a full year basis, because we've only got 1/4 of the revenue, a 1/4 of the net income when we look at it on a quarterly basis. Revenue growth, you can see here for the year we were up in revenue. We were down though in net income growth and earnings per share growth, which typically if you're down in one, you're going to be down in the other. All right. And then last month we did Nike. So how are we doing against Nike? 2 retail operations. And this is for the quarter, actually their second quarter compared to our first quarter. So they carry a little more cash than us. Their cash from operations was actually a little less than Starbucks. Their revenue is about $5 billion more. But take a look at this. Their profit margin is basically the same as Starbucks. They do fund some of theirs through equity. So their equity ratio is considerably higher. Their return on assets, very similar. Growth numbers, pretty high in terms of revenue growth, higher than us. But once China starts kicking in again, I'm guessing these numbers might be in jeopardy for Nike. All right. So that's our navigating the financials worksheet. We've done the prepare. We've done the analyze. We've got to apply now. Somebody may have told you at some point in your life to know and not to do is not to know. Pretty good statement there. To know and not to do is not to know. If there's something that we know, but we decide not to do it, in other words, I like to look at these earnings calls as is there a to-do for me in this? What do I need to do to get in line with the executives? Now, let me just share with you, in all of our classes that we've done this class in 32 of the Fortune 50 companies. We've done it in over 30 countries. Here's some of the results that we get as a result of our classes. Improved performance of your business or function, increased collaboration, improved upward communications, improved employee engagement, increased business focus, and improved teamwork. I'd say some pretty good results are coming out of these classes. So that's something that you could experience as well. Here's our apply page. I'm going to go ahead and I'm going to get it into some larger pages so we can see this. Just some of my insights from doing this analysis. Starbucks has done an incredible job growing their brand with over 36,000 stores and still growing to 45,000 by 2025. Incredible job growing the brand. I was with a retail group one time and I thought we were doing pretty good at 1,800 stores. They had good results in Q1 2023 and full year 2022, even with much of China shut down over the last 3 years. They take good care of their partners or employees, even giving some of their part-time employees or partners health benefits. Starbucks Rewards is paying off with $2 billion globally waiting to be spent in the stores. Also contributed, Starbucks Rewards, that is, contributed 56% of revenue to the system, up 3% over last year. And then finally, their reinvention plan. They actually have a chief reinvention officer. I think I may have mentioned that earlier. They've seen 8% improvement in hourly partner turnover. Improved turnover correlates to more stable store environments. That improves new hire-related costs, delivering results in shareholder value, confidence in revenue margin and earnings per share expectations, and uplifting human connection, both on the customer side and the partner side as well. So those are my insights, I should say, based on what I've learned. What are the 3 actions that I'll take? Well, number 1, I got to load up the Starbucks app. I got to load up the card. I want to learn more about Starbucks reinvention plan and follow their success. And finally, I want to continue following Starbucks results on a quarterly basis using this workbook. So let me suggest to you that if you don't practice this, you're never going to get better at it. So there's several different ideas that you could do. Number 1 is you could schedule a review of your own company. If you do that, let me suggest after you've done that review that you meet with your manager to align priorities and share the results out of that. Maybe you want to analyze a customer or a partner. We actually do a building business acumen for sales. And we teach you how to look at your customers or partners and how to relay these 5 business drivers back to them. Maybe you want to analyze a competitor or benchmark. Either one of these, let me suggest that you meet with your sales manager here or your manager to align some of the goals and objectives that you may have set or the to-do items that you may have for those. So we've done prepare, we've done analyze, we've done apply. Here's the 3 things you need to do just as a reminder before you get ready to do this. You want to locate the call or the transcript, review your notes from the past calls, and meet with your team. All right. Now, your challenge, who are you going to analyze? In the chat box, who are you going to analyze? Is it going to be the company that you work for? Is it going to be a customer, someone you sell to? Oh, I like it. Not just naming generically, but get a look at Marriott. I think that's a great one. Mo's going to look at the company he works for. Tammy's going to look at a customer. Maybe it's a partner, invest in, interested in. Next month, we're going to review Shopify. Many of you may be familiar with Shopify. They're kind of the software for many companies that sell their products online, similar in nature to an Amazon type company. Their stock has performed fairly well over the last several years. Unfortunately, just like everybody else, they took a pretty big hit, but I made a good decision to invest in them about 3 or 4 years ago, and that has certainly paid off. Meta's a fun one to look at, Susanna. I was looking at them. Well, I've looked at them over the last year or so. Their numbers are phenomenal. Tesla, which should be a fun one as well. Any meta-analysis on ETFs? Not that I am familiar with, but I couldn't say for sure, Brian. So yeah, good question. Potential teammates, Nokia and Marriott, company workforce, sell to. Awesome, awesome. So come join us again next month for Shopify and Brooklyn. Apologies, I didn't get the date in there. Do you all know, Brooklyn or Bailey, what the date is on that Shopify webinar? March 29th. There you go. Thank you. March 29th. By the way, if you have not downloaded a copy of the tool, you can go to acumenlearning.com/webinar and get a copy of that tool. Thanks for joining me today. Thanks for your participation and engagement as well. I had a good time. Sorry, I got a little rushed there at the end, but thank you all for coming, and look forward to seeing you again. Thank you all. No, it is not apples to apples in terms of Starbucks and Nike. Just wanted to show you can use that comparison navigating the financials worksheet to do basically anything you might want to do. The one way it could be apples to apples is it's retail to retail. Obviously different products. They're different average tickets. Nike's probably selling their average tickets probably, I don't know, $100 or more. And I don't know what Starbucks is, but 10, 15, 20, I don't know. Just going there individually, it seems like it's 5 or 6 or 7 every time. So yeah, but you can use that however you might want to, and compare whatever company you might want to over whatever time frame for that matter. So thanks for that question. I'm going to stay here as long as you all have questions. I think my friends Bailey and Brooklyn will stay here as well. So any other questions that you might have before we jump off? Thank you. Thank you all. Appreciate you joining today. All right, Bailey, Brooklyn, looks like most everybody has left at this point or doesn't have questions. I'm going to sign off. Thanks for supporting this today, and appreciate your help.
Thank you. You killed it. Killed it as
Thanks,
always.
Bailey. I always get a little rushed there at the end, but had fun with it.
I think, don't we all?
I guess, yeah. I
You
do.
don't
Yeah.
don't get through all the material if you don't rush a little. So you got to.
That's right. All right. See y'all later.
Bye,
Bye.
Kelvin.
Bye-bye.